Nice to hear these development stories like we've just had now from Sohosan and myself on OLAC. The Golden Mile on the Durban beachfront being rejuvenated. Got to get there. But Stefanutti Stocks is part of all of that. It reported first year, or rather full year results with a decline in its headline earnings per share. The CEO, Willie Meyburgh, joins us for a close look at those numbers. Willie, before we started talking during our break, you were saying it's been 2 tough years, and anyone looking at these financial results would clearly see that your operating margin is down to 1.9%. That's like R1.90 in every 100 rands worth of business. But you do feel that you're pulling things out of the trough.
We've been through a very tough time over the last 2 years, and especially in our building business units, where up in 2.5 years ago even, we took on projects at low margins, at very tight time schedules, and unfortunately we didn't perform well. And those projects stayed with us for 2 years now. And over the last year, we made an active effort to make sure that those projects are now behind us. And I think for the first time in 2 years, I'm comfortable to say that those projects are out of the system.
It's like the bad food in the larder has been dispensed with, and it's all nice and clean and better than 1.9% margins one expects?
Yes, I think so, because if you do look at our other business units, if you look at structures, they still produced a good 4.9% operating margin. In this market, we think it's quite good. In terms of our roads, pipeline and mining, they produced an operating margin of 7.8%. The MEP, mechanical and electrical, last year had a 51 million loss. This year, they showed a very small profit, which included a loss in power. And power we scaled down to a much smaller business. So, and then in building, where we had the problem areas in the divisions in Mozambique and in inland, we have settled those businesses down. We have made some structural changes, some management changes. The Maputo business, I can say categorically, that has been turned around. The current projects are making money. The inland business, we're busy turning around. We have got some issues we need to deal with on places like a couple of places in terms of claims we need to settle. We have taken those losses. We have engaged with the clients in a positive way, and they also want to resolve those issues.
Is this the competition commission?
No. It's where you have certain compensation events that you need to recover from the clients of information, for example, where there was late information or late access, and that you've incurred a cost, and you're trying to recover the cost back from the clients. Now, with some of those clients, it takes much longer than with other clients. But at this point in time, we are in positive discussions with our clients to resolve them. And to date, we've taken the cost on those projects.
Good. It sounds like there's a lot of juggling going on here. Yeah, Maputo here, civils there, pipelines there.
What interests me is that you're scaling back on your power, and so often when Alec and myself discuss that is often seen as a great opportunity. Why scale back on that?
No, for sure. We don't see that opportunity in that, because power is really power lines. Distribution, power line distribution, and over the last 2 years, very few tenders came to the marketplace, and as a result of that, we actually lost money. And there's no ways that we will stay in that market if that continued to be the case. That's why we scaled it down, and we look at other options going forward to see if that market picks up. Fine, we will keep it there. If not, then we'll scale it down.
It was interesting to read in the detail in your results that you say that government tenders remain scarce. Now, we were under the impression every time we talked to a cabinet minister or listened to our president here in South Africa that infrastructure programs are going ahead at full tilt.
I don't think they're lying to you. There's not.
Thankfully.
They're not lying to you. There's just not enough. We have recently been awarded a number of marine projects with more than 700 million rand. We have been awarded, okay, that was not in South Africa, but in Zambia, some road projects very close to R1 billion, and we're expecting more. We are doing some hospitals, we're doing some school projects, but there's just not enough coming to the marketplace.
But there's supposed to be 860 billion rand over the next 3 years. That's what Robin Gordon tells us in the budget. Who's doing the work?
Yeah, I think they've changed that now to 3 years. They changed it to 15 years. But you look at the PRASA.
They've changed it to 15 years.
I think it's for the latest is 15 years, that they're going to roll it out over 15 years.
Wow. But that's a big change.
But you look at projects like the PRASA station upgrades. Those projects have started to come to the market as well. They are in excess of 2 billion rand. They're nice projects. There are not many of them, but it's more work to the market. But the problem is that there is not enough of that coming to the marketplace. Plus the fact that the mining companies are not spending on their capital programs, especially on mining infrastructure work, where we've been very active over the last a couple of years ago. So there's little of that work coming to the market. But yet, we managed to grow the order book, because our order book in February last year was 8.5 billion. We've gradually managed to grow it at reasonable margins, better margins, not fantastic, but better margins. But it now sits at 12.8 billion.
Sounds to me like you're talking to shareholders at the moment by giving us a more positive picture. Are the shareholders going to watch this discussion and say, Stefanutti hasn't done that well over the past couple of years, but I'm excited about the potential into the future? Is the CEO feeling that way?
Look, I can just tell you the truth. That's how we feel, that we can see that the market hasn't changed dramatically in terms of work around. We managed to grow the order book with better quality order book. We have got pockets in our business that do very well. Building dropped us. They didn't do well at all. They had 151 million loss for a year, of which 90 million was in Mozambique.
But your share price has been in a channel, and it's just been going down, down, down.
Yes.
And you're at a stage now where I guess at some point you have to hit a bottom. Do you feel that you've got there from an operational perspective?
I feel strongly that we have hit the bottom, and as I said earlier, I think for the first time in 2 years I can say that we've turned the business in building, and that has been so far our Achilles heel.
Why else should shareholders believe you, given the fact that we're in this sluggish economic environment though at the
moment? Well, we can only do it to prove this financial year that we've turned the business. And for 2 years now we have been saying that we're going to turn. But we have now turned the business. We've taken the losses in the places where we faltered. We have now taken that to book, and we have put the loss-making project behind us, and it's going much better in building.
Is Africa the next growth story?
Well, Africa, in Africa, our turnover from Southern Africa is 22% at this point in time of the turnover. We see that going forward, that to be at least 30%. Work in Zambia, Swaziland, Mozambique, Namibia.
What about foreign competitors? We saw a few coming in the past. The Brazilians arrived and left very quickly. But more recently, particularly with the Iso-Frankie deal, it does look as though foreigners are looking, certainly they're looking at the South African market in other sectors. Are they coming for construction?
In the construction in South Africa per se, we haven't seen many foreign contractors. But in Southern Africa, for example, in Mozambique, in Botswana, over the last 2 months, we priced on a number of projects against the Chinese, and we were beaten hands down. So in the rest of Africa, it's quite difficult in the public sector to compete against Chinese contractors. But in South Africa, we haven't seen many foreign contractors, including Chinese, in South Africa. And that doesn't mean that the foreign contractors will not be here. I think the market must allow that. But South Africa is very regulated. So it's not... The construction industry doesn't make a lot of money. So if you're here and you don't make a lot of money, and you come from a foreign place, well, it's going to be a nice challenge. So